Is the 60/40 portfolio dead? And if so, what should you do instead? It is probably now more than ever being widely understood that the 60/40 portfolio is just not going to cut it for the future. This is something that served people extremely well for decades, but over the last few years, people have realized, hey, just because it's worked in the past doesn't mean it will work continuously into the future. Part of the reason for this is the debt cycle. If we take a look at the long-term chart here of the US government 10-year treasury, we can see long-term cycles of interest rates going down for decades, up for decades, down for decades, and it looks like here where we're sitting today, we're embarking on a new period of time, interest rates going up, which would indicate for decades. And here's why. During this period of a few decades where interest rates were going up, there was a period of high inflation. As inflation gets entrenched in a system, rates go higher and higher and higher as lenders demand more to get compensated for the purchasing power they're losing. Right now, obviously, rates are still pretty low compared to inflation because lenders believe inflation will come back down in the future. Now, you know that I've been saying, hey, we're going to get deflation in 2023. I don't think that's a long-term outlook here. I'm not anticipating deflation sticks around. I'm anticipating that the Fed responds to the deflation causes more inflation. So I think inflation is more entrenched for a long-term view, which is going to push interest rates much higher. So as we look at this chart of interest rates, we've seen interest rates coming down for a few decades, and we know interest rates and bond prices are inversely correlated. So as interest rates have gone down, bond prices have been going up. So bonds have been a great investment. No longer. We're entering into a period of time where interest rates are going to be going up, which means bond prices are going down. The other thing is this impacts the stock market as well. As interest rates go up, it slows down growth, makes capital harder to get, makes money more costly. And so that slows down economic growth and makes business growth harder. So the stock market may not respond the same way that it has for the last few decades. So the standard modern portfolio theory, 60/40 portfolio, depending on your age, it's probably not the best cookie cutter advice for most people for the next few decades on how to invest their money. Now, I've talked about other ways to invest many times. One of them is this barbell approach where you put most of your money in something extremely safe that doesn't move and a small amount of your money in these asymmetric bets. A lot of different small bets that have the chance to pay off huge if they hit, and if they don't, then you lose a very small amount of your portfolio. And despite the fact that you're taking on higher risk investments with a small portion of your portfolio, your actual risk reward profile for the overall portfolio is actually better than a standard stock portfolio. So I'm going to give you an example of a stock that fits this profile of this high asymmetric, high risk, high reward type of bet here. But essentially what's going on is in a standard portfolio, on worst case scenario, you're going to be down, 40% in a year. But on an average down year, you might be down 5 or 10%. Best case scenario, you're probably up, 20% on a really good year in the stock market. But if you have, a lot of bonds as well, then maybe you're only up 10%. Well, instead, if you take like a barbell approach where you put most of your money in something safe that doesn't really move in terms of its purchasing power, you take a small 5-10% allocation of your account and you divide it up between a bunch of asymmetric bets, and then one of them hits and it goes up 5, 10, 100x. Well, that's going to drive the performance of your overall account, even though it started off as just a small allocation, because they have the potential to explode so much in price. Well, then that drives the overall performance of your account. Worst case scenario, if you invested 5% into all these high risk, high reward bets, well, you lose 5% of your account. Everything else is invested in something really safe. But if one of them does hit, then you get your 5, your 10, your 15% overall performance because that one went up 100. Now, you know that I like using options for this. My background is in options trading, and I think it's a really useful tool to learn how to use options. They are dangerous though. And so if you don't know what you're doing, like I didn't know what I was doing when I started, you can lose money really quickly. You can lose way more than you bet if you do it wrong. And so options are something that you want to make sure you get into really carefully if you don't know what you're doing. And that's why it's nice to be able to do this with stocks as well. It's just hard to find stocks that fit this profile, this asymmetric bet profile, where you could, only lose what you put in, but they have the potential to go up 5, 10, 100x. So this stock, Clarity Metals Corp, this is a stock that fits this profile in terms of a stock that has the potential to go up an extreme amount. It's one of these high risk, high reward plays. They're actually a sponsor of today's video, and I do own shares of Clarity Metals Corp myself, so I want to show you why it fits that profile of having this potential to just explode in price. And just to be clear, this is not one of those giant blue chip stocks. This is something that has the ability to, long in the future, become something like that. So right now, it's one of these asymmetric bets where it has the potential to pay off huge. High risk, high reward, asymmetric bet. So what about this company fits the characteristics that you're looking for if you're looking for one of those asymmetric potential payoffs? Well, two reasons for this company are gold and lithium. Now, obviously, I've laid out the massive bull market case for both gold and lithium in many videos. The nice thing about a company like this, though, you don't need a bull market in those metals because this company is just about to start drilling on their gold property and their lithium property. So if they hit, all you need to do is know that those metals are there at the current price. Yes, lithium is up 400% in the last 2 years. Yes, gold is embarking on a massive bull market here. So you're able to go into a place that has ostensibly right now nothing, no drilling has taken place, and then you find something, suddenly that property is worth a ton. So what are the chances that their properties actually strike gold? Well, here's their gold property. It's located inside the Abitibi region, and this is a place that is just rich with properties. Obviously, you can see the companies here on this map that are in this area. You've got Factal, you've got IM Gold, you've got Glencore, you've got Hecla, you've got Agnico Eagle, you've got Yamana Gold, you've got Alamos, you've got Newmont, you've got Amex. The list goes on. This is an extremely rich region, and so this is where they're going to be drilling. This is where their gold property is. If that was all, it would be a great story, but they also have their lithium project, which is even more exciting. Take a look at this map, which shows Clarity Metals Corp in the top right. That's where their lithium property is. And take a look at the companies that own properties all around them there. We've got Alchem, Osisko, and Patriot. Patriot is a $500 million company. The next on here, Osisko, right beneath them, is worth $1.5 billion. And then the big purple one, Alchem, $7 billion. So Clarity was able to get the last property in this little area that has proven to have enough lithium for these companies to be worth massive amounts of money, and this is where this gets exciting. Clarity Metals Corp is only worth $7.5 million right now. They're about to start drilling in areas that have proven around them to be rich in the resources they're looking for. If they strike, this company overnight could very easily be worth 2x, 4x, 10x, or more. Now, again, I need to emphasize, high risk, high reward. This is a small bet play. This is not something you go in and you put in, 10% of your entire portfolio. This is something that is extremely low market cap. You start buying up shares of this at market with market orders. You start driving up the price, and as soon as your order fills, price comes right back down. You got to be careful with entering these. These are small bets, but the time is ticking. They're going to start drilling extremely quickly here, and when they do, that countdown clock begins, and the moment they strike and find something, it's game over. That price shoots straight up and you can't buy it once they find it. Now, specifically with this region for lithium, this is very important because this is in Canada. And right now, most lithium comes out of South America. China's trying to buy up all the rights in South America right now. America's trying to do it right now there as well. A little bit of an unstable region. And so having lithium in North America and Canada, that is a much more valuable place to be able to get lithium from. This property has never had drilling on it, so it is completely unexplored. They bought it from a group of operators that had not done any drilling on it yet. So it is fresh. They've seen some signs that they think there might be some lithium there. And so they start drilling on this. They start drilling on their gold soon. This is one of those small bets like I was talking about. 60-40 portfolio is dead. Many people are moving over to different types of more actively managed portfolios where you have most of your money in something safe and then smaller bets in plays that don't have a high rate of success, don't have a high probability of paying off. But if they do, man, that payoff is huge and it can drive the performance of your entire portfolio. This is not advice. It is not a recommendation. And I do own shares of the company myself. So make your own educated decision. As always, really appreciate you guys. Thank you so much for watching. Have a great day.